Now call the meeting of the Carbon County Board of Commissioners to order. Please rise for a moment of silence, prayer, and the Pledge of Allegiance.
Father, bless this meeting today, all those present, as well as all the lives of those we will encounter afterwards. I pray for those who are ill, that you will heal. While it is foolish to worry about tomorrow, it is wise to prepare our thoughts and emotions for the next day. Amen. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
These proceedings are being recorded for the sole purpose of constituting the accuracy of written minutes. Tapes are reused, eliminating recorded records of these proceedings. Approval of the minutes of the previous meeting held August 13th, 2020.
So moved. Second.
Mr. Arner?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes. Are there any guests concerning county business at this time? Hearing none, we'll move on.
Report of executive session, Sally?
There was one executive session held on Monday, August 17th at 1 p.m. for litigation.
Department reports, the budget transfers.
Move to approve. Second.
Mr. Arner?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
There are no supplemental appropriations. Expenditures, approval of payroll check numbers 72646 through 72699, and direct deposit check numbers 6022217 through 6022645 for the payroll paid through the payroll fund checking account for all county funds totaling $600,558.94. This is the payroll dated August 14th, 2020.
So moved. Second.
Mr. Arner?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
Approval of check numbers 215079 through 215189 for expenditures to the general fund clearing account totaling $257,920.59.
Move to approve. Second.
Mr. Arner?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
The treasurer's report?
Move to approve. Second.
Mr. Arner?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
Personnel report?
So moved. Second.
Mr. Arner?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
Correspondence was received as listed. Copies will be made available to the press upon request. Advertising, CDBG. For approval, authorize the advertisement of the invitation to bid for the community development block grant projects as listed below.
Move to approve. Second.
Mr. Arner?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
Authorize the advertisement of the second public hearing notice regarding the fiscal year 2020 CDBG CD funds, an application for entitlement and non-entitlement communities.
Move to approve. Second.
Mr. Arner?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
Elections. Authorize the advertisement of all legal notices relative to the 2020 general election.
So moved. Second.
Mr. Arner?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
CCT Atlanta MATP program. For approval and execution, the service agreement between the county and Atlanta for transportation services provided under the Medical Assistance Transportation Program for the period of July 1, 2020 through June 30th, 2021 at a cost per trip rate of $53.47.
Move to approve and execute. Second.
Mr. Arner?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
Allocation letter from the Department of Human Services for the 2020-2021 MATP program, listing the initial allocation amount of $598,859.
Move to approve and execute. Second.
Mr. Arner?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
Courts, the jury management software. For approval and execution, requests received from court administrator for an agreement with Judicial Systems Incorporated of Tyler, Texas, to purchase the Jury 2020 Plus Jury Management System at a total cost of $58,635, which includes the items as listed, plus support costs for year 2 through year 5 as listed.
So moved.
Second.
Mr. Arner?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
yes,
Human Services, Homeless Assistance, for approval and execution, letter of agreement between the county and the Carbon County Action Committee for Human Services to provide any and all assistance requirements under the Homeless Assistance Program guidelines and funding provisions in the amount of $27,359 for the term of July 1, 2020 through June 30th, 2021.
So moved.
Second.
Mr. Arner?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
yes,
HSDF, letter of agreement between the county and the Carbon County Action Committee to provide any and all assistance requirements under the Human Services Development Fund program guidelines and funding provisions in the amount of $50,000 for the term of July 1, 2020 through June 30th, 2021.
Move to approve and execute.
Second.
Mr. Arner?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
yes,
Moyer Drilling Services for approval and execution, change order number 1 to the proposal from Dwayne Moyer Well Drilling Incorporated of Lehighton, Pennsylvania, to complete the required pumping tests on well number 2 located near the animal shelter as recommended by the county engineer. This change order increases the proposal $722.44 for a new total of $17,622.43 to install a drop tube for the piezometer reading.
Move to approve and execute.
Second.
Mr. Arner?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
yes, and that piezometer records the pressure of the water and how much it pushes the water up for elevations. You know, 1 PSI is like 2.31 feet, but that's what that meter is for measuring the water pressure at the bottom of the well. For testing for flow purposes, it'll give you the amount of flow capable in that well. And we're on the second day of a 3-day test.
Okay. The Solicitor's Report, elections, for approval and execution, an agreement between the county and Suzette Kurtz of Lehighton, Pennsylvania, to provide logistics and accuracy testing procedures for the 2020 general election. Compensation will be at $20 per hour, not to exceed 35 hours.
Move to approve and execute.
Second.
Mr. Arner?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes,
Pocono County's WIA, modification to financial agreement with Monroe County. For approval and execution, the modification request to the program year 2020 Workforce Innovation and Opportunity Act financial agreement commencing July 1, 2020 and terminating June 30th, 2021 for the employment, training, and related administrative services between Carbon County as the administrative entity and Monroe County. This modification includes an additional $1,338,555 in carryover funding. The maximum payment amount shall not exceed $3,218,470. And as you can see, the original payment was $1,879,915.
So moved.
Second.
Mr. Arner?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
yes,
The modification agreement for Pike County. The financial agreement commencing July 1, 2020, terminating June 30th, 2021, for employment and training related administrative services between Carbon County, the administrative entity, and Pike County. The modification includes an additional $424,919 in carryover funding. Maximum payment shall not exceed $1,144,463. Original payment was $719,544.
So moved.
Second.
Mr. Arner?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yeah.
Modification, Wayne County. The financial agreement commencing July 1, 2020 and terminating June 30th, 2021 for employment and training-related administrative services between Carbon County, the administrative entity, and Workforce Wayne Incorporated, Wayne County. Modification includes an additional $398,208 in carryover funding. Maximum payment shall not exceed $912,468. Original payment was $514,260.
Second.
Mr. Honor?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
Further business? Hearing none? Commissioners' reports, Mr. Honor?
The only thing I have are commissioners to report, but I think somebody's here from the sheriff's department. And I don't know if he would enlighten us on what the procedures have changed of people entering our building as of this week.
Sure, Commissioner.
I didn't want to put you on the spot,
That's okay.
but, well, we're testing it.
You're right.
No problem. For those that I haven't met, I'm Dan Ziegler. I'm the new captain at the Sheriff's Office. So through some concerns with deputies being exposed potentially last week to an individual who was positive for COVID-19, we instituted some systems at all of our security posts as well as the magistrate offices. And that was listed in an administrative directive that was listed and provided to all staff in all those locations. So when they come in to the buildings, we made sure the signage is up. We are utilizing 4 questions that we ask everybody coming into all of the buildings regarding their exposure to COVID, symptoms for COVID, so that if anybody answers yes to any of those questions, we may dig a little deeper. So for example, if somebody comes in and says they have a cough, we may say, well, do you have allergies? Are you a smoker? Because having a cough, although it is a symptom of COVID-19, may not mean that they are positive. So we will do that. If they answer yes to that question, we have the digital thermometers at all of those locations. Our deputies in those locations will then take their temperature. If it is above, if it is 104.4 degrees, they will be denied entry and then will be directed to call whoever they were there to see, whether it have been probation or whatever office. If they are there for court purposes, we've instructed them or will instruct them to call court administration so that they are included in that loop as well. For some reason, if they make those calls and they still can't come in the building, they may just be told they got to come back another day or whatever it may be. So that was put out to all of our deputies and security personnel. As I said, it seems to be working well. The addendum with the thermometers was just added yesterday. We were fortunate that Commissioner Arner had some digital thermometers yesterday, so they are in all the locations. They started using them today, and we will get them out to the magistrate offices next week when our deputies are there. So far, so good. No issues. It doesn't seem to be slowing anything down as far as traffic flow, but we will continue to monitor that and then adjust accordingly.
And I just want to thank the sheriff's department for this, because every day something changes with this virus. And every day we're doing something new to try to make it safer for the people coming in. So I want to thank the sheriff's department for stepping up to this. And I said it's the sheriff's department and somebody else is stepping up, and that's how we're going to stay ahead of this virus. Thank you.
If I could, maybe while we're on that same subject, I don't want to interfere with you, but the public and the employees, we have to reiterate that if you have the symptoms beforehand, if you are in contact with someone that has been tested positive, or if you yourself have tested positive, do not even come to the courthouse or any of the county facilities. The same goes for not only visitors, but employees only. Almost on a daily basis, we have had to deal with issues within one of the offices. Some were really handled superbly by the department heads, and we moved on, did what we had to do without incident. We've been very lucky so far, but the public and the department heads and employees have to understand, not just a simple cause, like the captain here has pointed out, of just a cough. There's other issues. Yeah, we all have aches and pains, but out of the ordinary. If you are exposed, do not come to the county facilities and notify those that you were supposed to come in or have a meeting with, or if you're in court. So please call before, if you're in doubt at all.
Commissioner Lukasevich?
So I'll stay on the theme of COVID-19 and just provide an update from all of us really in regards to the COVID-19 Relief Carbon County block grant program. Tuesday afternoon, the commissioners did provide their final guidance to the committee leads, who will be doing an extra step of assessing the applications. We provided guidance to those committees that included putting a cap of $100,000 on any grant for consideration of disbursement. Now, as we initially looked at the grants, we had over $13.6 million in requests. However, once it went through the first vetting process by the Block Grant Administration cell, justifiable requests were actually down to about $5.7 million. So almost 2/3 less than what was originally requested. We did also see of the 221 applicants, 90 of them did receive PPP, EIDL, or other. And most of us who are involved in this recognize that priority goes to those applicants who have not received PPP, EIDL, or other. And I would mention that we did have 22 entities of those applicants. They were either ineligible or eventually withdrew their applications. So we're just under about 200 active applications. Now that does exclude 5 earmarks or placeholders. 3 of those are to support the entities, Carbon Chamber, Carbon County Community Foundation, and the Council of Government that is assisting us in this process. And then 2 placeholders for the county. $1 million is the main one, plus there's a $500,000 earmark placeholder for broadband enhancement. It is the aspiration to send out an RFP sometime late next week after the commissioners meeting, seeking proposals to enhance broadband in Carbon County for those areas that are unserved or underserved. And I want to specifically thank the Weatherly School District, of the school districts that were canvassed to provide data to help us identify areas of notable need. Weatherly really stepped up to the plate, providing us, based upon the surveys that they have done up there in the school district, about 120 specific addresses so that we could pinpoint, in cooperation with our GIS mapping office, specific areas of need. And that'll help feed into the process and assessment of any proposals that might be brought forth in regards to enhancing broadband through projects or products. That's all I have.
Commissioner Notstein?
Yeah, just a little bit of update on the election office. We're well over 6,000 applications for mail-in ballots now. Our office, and I think all of us, are getting phone calls all the time about all the ballots they're receiving in the mail. And a lot of people are receiving multiple ballot applications to be sent into the county. They're coming from Harrisburg, I guess Washington, I don't know where all, and requesting information, driver's license and social security number, and that stuff is required for the ballots. But we're getting a lot of calls because even the unregistered voters who don't want to register are even getting multiple ballots. So if you mail one in, you don't have to mail in a second. If you're in doubt whether you were registered for the application for mail-in ballot, call the election office. I mean, they're already overloaded with workload with all these phone calls and now the applications and preparing them for mailing. So it's, just wanted to give you a little update and be aware of all the mailings you may be receiving. So, okay, that's all I have. Meeting adjourned. Let's do the news media quick since we're gonna go into retirement board. If you have any questions?
I just have a quick question for Dan. Who did you say that was that had potential exposure last week?
We had two deputies that were working the front door of the courthouse. Somebody who had come in and did not report symptoms, but when they were in the building, in an office, they reported that they were in quarantine because one of their family members was COVID positive. So when we learned that information, we notified everybody, followed the procedures that were in place regarding sending those employees home and then requiring that they get tested for COVID. And that was last week. I believe it was last Friday, Commissioner?
Yes.
And it was at the courthouse, you said?
Yes, ma'am.
And so then all the new protocols are at all the district judges and then the courthouse as well, right?
As well as the administration building here and the domestics building. So everywhere where we have a security post, the same protocol is in effect and has been reviewed with all of our office personnel.
Cool. And then is your last name Ziegler?
It is ZEIGL.
Okay, yes, good thing I asked.
It's a common misspelling.
Zeigler.
She's not from the area, so.
So I wanted to just make sure. So Zeigler.
Thank you for clarifying.
Yeah, of course, and Captain, right?
Yes, ma'am.
Awesome. Okay, I don't think I really had anything. I was gonna ask about the election, if there was any updates, but you guys gave that. So I think I'm good.
Okay. Kelly, anything?
Captain, could you repeat what you said about the temperature check?
So our process now is that there is signage posted in all of those areas. When people come in, they are asked a series of 4 questions regarding COVID. If they answer yes to any of those questions, particularly among their symptoms, our deputies will delve in a little further to those questions. For example, I gave that suggestion with the cough, are you a smoker or allergies or something like that. But because they say yes, that they have some symptoms, the deputy or security personnel will take their temperature. It's a body temperature that they put on their forehead. If that registers at 100.4 degrees or higher, they will be denied entry, and then they will be required to call the office that they were here to visit, or court administration if they were here for court. The thing with those thermometers is they're not 100% accurate, and when people come in, if their body temperature is heated, like it's elevated because of their walking or was hot out, we can take a second reading just to double check. But that process was instituted with the thermometers this morning, and it is working well after having checked with all of those posts. And we will continue to monitor that on a daily basis. And as the commissioner said, we are dealing with these challenges every day, and we will continue to adjust our plan as appropriate to keep everybody internally as well as externally as safe as we can from exposure.
Thank you.
You're welcome.
That's all I have, gentlemen.
Okay. Okay, before I call the meeting, Sarah, would you like to come up here and join us, and you're gonna move up for it?
Yes. No, you just like that.
Thank you.
Good morning.
Good morning.
Thanks,
You're
guys.
gonna leave, aren't you?
I am.
I should have made you make.
Thank you.
No offense.
It's not personal.
I knew that was gonna happen.
That's it. What are you gonna do?
Okay, all set. Any more?
All right, thank
Okay,
you.
I'll call the meeting of the monthly meeting of the retirement board to order, and I'll turn it over to our secretary, Mark Verchek, controller.
Thank you, Mr. Chairman. First, we'll look for an approval of the minutes from the previous meeting held July 16th of 2020.
So moved. Second.
Mr. Sheehan?
Yes?
Mr. Spurcheck, yes. Mr. Arner?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
I abstained since I was not at that meeting.
All right, we do have Sarah Wilson from Marquette. She'll be speaking shortly to us here. Any other guests for retirement board business?
No one back there.
Hearing none. No, there weren't any executive sessions. Next, we'll look to ratify the warrants number 40607, 40 to 40627, and the direct deposit number 7008459 to 7008831 for the month of July.
So moved.
Second.
All right, Mr. Sheehan?
Yes.
Mr. Spurcheck, yes. Mr. Arner?
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes.
Okay. And the retirement activity for July is in your packet there as well. We had 5 retirement refunds. We had 1 superannuation retirement, and 3 retirees had passed. And our portfolio value as of end of July was a nice number there of $80,421,840. I know Sarah's going to give an update here shortly on what's been going on with the fund. I did not have any correspondence, and I know our solicitor is absent today. So next we'll turn the meeting over to our investment manager, Sarah Wilson from Marquette Associates.
Good morning. So choice 1, performance report. Choice 2, custodial search. What would we like to do first?
Performance?
You want to do the performance?
Yes.
And then okay, let's do that. All right. So it's nice to finally be back. You know, we've done a couple team meetings, but what I'm going to do is I'm going to go over a little bit, and let's just keep in mind, you know, we did do that meeting that we talked about all the transition. We got you all those emails. So this quarterly report is, you're going to see a lot more in the next quarter report. Let's turn to Exhibit 1. We'll just talk a little bit. I want to give you a little update on Marquette. Assets under advisement, we're at about $213 billion as of the end of the first quarter. We've actually been adding new clients. We've seen some very nice growth. We're at 425 clients, and we just added about 7 more through June 30th. And then one of the things that I really want to note is that we've been adding employees. Even though we're virtually working from home, we have added employees. We're adding a new performance analyst to the Westchester office, which does all of the reporting and portfolio management for carbon. And we're also, Kat, who was our client analyst, is actually leaving the firm, and we're going to be adding a new client analyst. But until then, Terrence Ryan, who I've been working with for 10 years, he's unbelievable, will be helping me with this, and our performance analyst out of Chicago. Speaking engagements, we're still busy. They're all virtual. I know I'll be speaking to the Pennsylvania Controllers Association, doing an education class virtually at the end of September, and also doing the Allegheny League of Municipality Pension Summit. So let's turn and look at market environment, and that's Exhibit 2. So we've had a very interesting market environment for the second quarter. We've seen lots of things change. What we have seen, though, is real GDP declined by a staggering 32.9%. And look at the chart below, you can see where it went down. And then we're hopefully going to see GDP go back up into positive at about 15.2 for the third quarter, and then a little bit below that for the fourth quarter. We look at the U.S. economy and consumption and employment. Now, what happened was, we know that everything shut down, and if you look at page 2, you look below, and you can see the United States, and that has really changed even since 6/30. You know, who's reopened, who's closed back down. But we saw retail sales go up 17.7, and we really saw a bump in the market with that. But you have to remember, nobody was able to go out shopping online, but, you know, so we've seen those, and you can see they went down to 7.5, so there was a contraction on there. We know, we look at the unemployment rate, April was at 14.7, June's at 11.1. So look at where we started the year at 3.6. For the end of the quarter, we ended at 11.1% for unemployment. And then let's turn the page when we look at the global economy. What's happening outside is they're experiencing a historic contraction as well, as in the U.S. global policymakers have implemented large-scale stimulus packages. Look there. Look what they did in stimulus in 2009. Below, this is page 3, the global financial, that bar chart. And we look at 2009 and 2010. Look at the percent fiscal measurements just for that one quarter, 4 months in 2020. We look at how things are steadily reopening. Notably, China has seen economic data has rebounded earlier and more stronger than anywhere else. Then I really want to look at the global composite PMI. So PMI is a monthly summary report, and look at below, it's page 3, that global with all the colors. And it is the changes in working conditions of private companies. It looks at manufacturing, service sectors, the composites of 5 service indices, new orders, output, employment, supplies, delivery time, and stock and purchases. And why that is so important is look where we are. Look how Europe went down. Look where China has bounced back up. I always say this with a little bit of caution because, you know, China has been, sometimes they don't report as well. And then we look at Japan. This is really important because this is when we look at your global and we look at your international exposure in the stock market. You know, this is going to have a lot of effect in when we go forward, and hopefully that will bounce. When we look at the global asset performance, you can see on page 4, one of the things, global equities rallied sharply. Non-U.S. equities, you know, had a ton of market volatility. International equities experienced a sharp rebound in the second quarter of 2002. Fixed income, I just want to talk a little bit about what has happened with the Fed. You know, they've delivered a press conference stating that they are not going to do any new policies. They're going to continue on the path they are. Of job losses, about a third have been regained so far in the recovery. The view of the economy's path forward to continue to be uncertain. The Fed will keep the zero rate policy with the Fed funds rate of 0 to 25 until the economy is back to achieving growth and job targets. To help smooth market functioning, the Fed will continue to, do easing in there. The emerging lending facilities will continue to serve as a backstop for key credit at the end of the year. They plan that with the pandemic passes, they'll stop these. Powell emphasized, the chair, that there are not grants as the Fed can only lend, that Congress would be relied upon to continue to provide direct fiscal support. One of the interesting things that happened was that we actually had Alan Greenspan speak to the consultants at Marquette online. It was very interesting. And, you know, the number one question is, are we going to see negative interest rates? Well, how many of you would go out right now and buy a 30-year bond? It's actually almost negative to go in and think that's what's already built in there. And it was a very interesting conversation. So, you know, we know that fixed income, we'll talk about what we've done in your fixed income account to try and get you a little bit of some better returns. And just look at U.S. equities on page 4. Look, they were up 22%. We know this week the S&P 500 hit an all-time high. We look at emerging markets. So everything was in the green for the quarter. And we also looked at what happened year to date. Commodities have been really down. We know that oil has been really struggling. If we turn to page 5, you know, U.S. equities, after falling into a bear market during the first quarter of 2020, U.S. equities rebounded sharply in the second quarter. Congress announced a fiscal policy, which helped that, and the Fed dusted off its 2008 playbook. A new bull market took hold despite high unemployment, catering industrial activity, and free-falling corporate earnings. The S&P closed the second quarter up 20.5, gaining 38.6 from the market trough on March 23rd, and is just 3% off year-to-date as of 6/30. We now know it's in positive territory. In some ways, it's been kind of, we look at the recovery, and if you look at page 5, you can see, what happens after we see it on that graph, the multicolor graph. You can see how many days it takes after we've hit a bear market. Interestingly enough, this has been taking a little bit longer from there. It's a little bit different, and there's still $4 trillion sitting on the sidelines waiting to be invested. So there's, as we see this market going up, there's still a lot of people on the sidelines waiting. And one of the reasons that can be is that, we've talked about when are we going to see a correction. Everybody could have thought February, March, April, there's our correction. That was not our correction. That was severe panic over the virus. We are still set to look for a correction at some time. One of the things that we've been working on, we'll get it out, and it's not political, but when you look at the policies of both candidates running, what will the market do depending on who gets in? This election is very different from any other election. Usually we say that this is the quarter that everything will be very, very calm. We'll go into the fourth quarter. We'll feel really good about it. Might be a very change historically on that. And then depending on what happens, we also have the virus, which can come back again, shut down the country. And now we know that the $600 gone, the stimulus check's gone. So what's really going to happen with unemployment? You also have, I know in downtown Pittsburgh, 1,000 PNC employees are now working virtually forever from home. So you're going to start seeing, and we'll talk about this because this is, we're looking at real estate, what's the effect of this on corporate real estate. We look at what's happened and that, if people are not coming into the cities to work, there's going to be more unemployment, that we could really see a hard couple of years ahead. If you look at page 6, one of the things that really kind of happened in this year was only the outperformance of 5 stocks. The largest 5 stocks have returned more than 25% of the S&P 500, while the remaining 495 stocks of the S&P 500 were down 10%. So in the first quarter, you probably wouldn't have wanted to hold those 5 stocks when we saw the market down. It would be great to just hold those 5 stocks right now. But as we know, we are diversified, and we will talk about that when we look at your performance. We also know that growth, again, outperformed value. Usually we see value outperform, especially in a very volatile market and in a down market. We have not seen that yet, and you could say, well, we take a little bit of a value tilt. We believe that that is still a good place to be. Managers are trying to get any return they can, but over the long term, and your value tilt is very small, we still believe that it's better to be protective, especially with a pension fund. And you can see where the U.S. equity market concentration is. Look at that below, that blue graph, at 21.7, the only names to enter the top 5 post-2015, and they list those: Amazon, Apple, Berkshire Hathaway, Alphabet, Facebook, Microsoft, ExxonMobil. So you have exposure to all of those within your managers. Are there any questions on the market? All right, so what I want to do is let's go turn to the portfolio. And in the back of your portfolio, your report, you're going to see a page that has your July 1st update. So we can go, we are on tab 3, page 1, and then just grab it out of the back of your book. You should have it in there. All right, so as of June 30th, the market value was 77.4 million. Second quarter had a gain of 9.2, returning 12.4. Trailing 12 months had a 3.3 with returning 3.6. And since inception, the gain of 22 billion, returning 5.8 per year. As of August 14th, you were at 81.8 million, so you've had a lot of growth, and we've seen it go back into positive territory. U.S. equity composite returned 20.2, global equity composite for the quarter returned 19.3, non-U.S. equity composite returned 15.9. Fixed income returned 4.9 for the second quarter, and year to date about 6.0. That has changed a little bit when we look at what has happened with the market. We'll go over this page soon. So one of the things that you did was you switched over from traditional to OCIO. We diversified the fixed income, adding passive aggregate bond fund and high yield. And we'll talk about that in just a minute, because that high yield really has helped the fixed income portfolio. We switched MFS low volatility from a mutual fund to a commingled vehicle, which took down the expense ratio of 0.68 to 0.46, which estimated annual savings of $10,000. So when we look at performance, let's turn to page, I want to look at the managers. Let's turn to page 7 and 8, and then we'll compare it to this. So really to get a glimpse of where you are in performance, you did underperform a little bit on the benchmark. That is not surprising with the amount of trading that was done and rebalancing that portfolio. We still think that you had a good quarter. One of the things we look at, GWK is not in there yet because for the quarter they don't have a full quarter. We did add them in. American Funds Washington Mutual did exactly what we wanted to do. They were added in. Look, they're 19.7 versus 11.7. This is under U.S. equity composite. Year to date, negative 6%. The benchmark was a negative 15.3. That is one of the defensive things that we have done for there. We look at your global, and we added the MFS at 11.3 versus 9.7 for the quarter. And Dodge and Cox we added them in May. For the quarter, did 20.3 versus the benchmark of 12.7. And they were right on year to date. And then we look at Fidelity, Total International, and then Schroeder's we'll look at in July because we were still getting those in June. And then we look at real estate. So real estate year to date is down about 1.3%. We're going to talk a little bit about that. One of the things that we came to you and you signed off on is we said, look, we don't want to reinvest your real estate dividends. You're at the high. Why on earth would we want to reinvest those right now at the high? And we believed that just taking that out would help you with some of your cash issues. So that's one of the things that we went back into. The other thing is we're going to look at how much you are in real estate and where we want to be in real estate. And this is, I know we added more in. We were comfortable with that. But we're going to probably do some more asset allocation studies and talk about some of the things that we would like to do. I'd like to look right below at the Lord Abbett High Yield. Look at that, 11.4 versus 9.5. What we did was, and that gave your fixed income year to date, you're at 6%. For the quarter, you did 4.9 versus 2.8. So we added in fixed high yield. You were added in May. What we did for the OCIO clients when we were transitioning, just so you know the history behind this, is that we were looking in March and April, and we said, look, there is a really nice spread that we can take advantage of in high yield. It does not change your investment policy. It was written into everybody's investment policy. And we just put in a little percentage of the portfolio, and we went in very slowly back up to target. We didn't just go in and say, we'll put in all high yield. We did 50 basis points, and we did 50 basis points. We did 50 basis points. You're a little bit different just because we transitioned you. So, it's a short play. You have normally not seen us go in and put something in and then take something out. But we really wanted to capture some of that for fixed income, know where we're going. So we are now watching it. We had an investment committee meeting this week, and you might see us we'll start slowly switching out of that. It was a very short something, and then we'll do it at 50 basis points until we're down to 0, depending on where we are on that. Let's just look at this real.
I have a question. Back to the prime property fund.
Yes.
I know we have about 10% of the portfolio there, and I didn't look at all the holdings, but I think it's pretty common knowledge now with the way it happened with the economy and working from home, that commercial real estate and retail real estate has really gone way down. So I don't know what part of the portfolio would be made up of those type of
Okay.
entities, so.
Let's
just-
turn to page 26,
Okay.
and then we'll go back, we'll finish up with July, and then we'll unpack. So let's answer that now. Page 26 is your Morgan Prime property. And you look at the top 10 holdings. And yes, they've got a lot of office, San Francisco, New York, Boston, retail's in San Diego. So when we look at that, pre-development's 0.3, in development is 3.6, operating's at 87.6. We have right now in the queue, they've got about 1.2 billion going into real estate right now, meaning that there are still investors coming in, they're still calling them. And we look at the top 5 metro and Los Angeles, Chicago, New York, Boston, Miami. Occupancy right now is at 93% as of June 30th, so there's really not as much concern. There probably is going to be. I mean, real estate's going to go down. We know
Right.
this is going to be, one of those things. It's like holding, technology stocks when we had, the dot-com just crashed. This is going to be something hard. This is a very long-term investment. We look at where they are heavily in the West, and they are heavily in the office. Has that done very well for them in the past? Yes. Do we think that they're probably going to restructure? If they can, they will. But their leverage is still very low at 16.4%, so we're still very comfortable with them. And remember, the Morgan Prime Property Fund is, all of that money is pension funds. So this is what that fund is. They understand pension funds, they understand the liquidity needs, they understand the tolerance, the risk tolerance. So we're still very comfortable with this.
That was my question.
Yes, we're very comfortable with it. Would I love to be able to get out of it and sit on the sidelines for 18 months with it? Yes, but is that reasonable? No, because we really don't know exactly what's going to happen. And we know that this was a 10, 15, 20-year investment. If at any time that we thought, and believe me, they have been, the analysts, we have been doing online meetings, so saying that, we've had them in, but we were not allowed to do that. But we've really been, and we've got a whole team just to our real estate funds, and we're monitoring this very well, and we knew that this was going to take a bit of a hit.
So, Sarah, if you could,
Yes.
with the Morgan Prime property, the top 10 holdings, most of it is in office and very little in retail, which is nice. But could you get back to me with how much of the overall fund is in retail? Is there any way of finding that out?
The overall fund and you can go look, and yes, but if you go look at retail, look at the second.
Oh, there it is.
There it is, it's
Okay.
right there. So their benchmark is about 16% in retail, and they're underweighted the benchmark, they're about 10% in retail. And I think when we talked about them, their retail is big, massive retail stores, but we know retail's gonna have a really tough time there. It depends on what happens with the virus and, how people do. Retail did get shut down online. We've seen a lot of online, everybody was buying, but there eventually people want to get out. They'll want to go shopping again. They'll want to go touch and feel what they're buying. It's human nature. So, and the retail where this is located is, very high net worth individuals. So it is gonna take a little bit, but they have not overweighted themselves in the index, which we like. They've underweighted themselves there. They also, at the end of fourth quarter, sold one of their retail large pieces of property, and that gave them some cash on there.
They're pretty much non-existent in the hotels, which would be another area
Which
of
is really
concern right
nice,
now.
right, absolutely, and they are not. So, this was a long-term, they've been vetted, and if you look, they've got a lot in the south, we see the south growing. And when we look at the west, it doesn't necessarily mean all of California, it's just some of their top holdings, only because of the pricing of that property. But you're gonna start seeing them develop more, like Colorado, Utah, half of California seems like on the residential side is kind of going across the border.
Sarah, so
Things we're seeing around here is the residential. If people are moving it from working in the office to working at home, are they gonna be moving to another area possibly? Because if they're in the city now, the big cities, especially with the cost of living and everything, they're gonna move to more of the countryside. And we're seeing a real surge in one area in particular in the county where real estate sales are really taking off. We don't know if it's second homes, trying to get away from the cities and the COVID issues or what's going on. So if that trend continues when working at home, is that,
That is gonna have an effect on commercial real estate, that is the one thing, everybody's working at home. And they've been able to transition a lot of people from, to work at home. I think you're gonna see, we too, anything outside of the city, you can't buy a house right now in Edgewood. They're on the market where I live, they're gone in a day. People just we've really seen that. That's gonna be, and you're gonna see that all throughout the suburbs across the United States on there. I'm kind of on the sidelines on saying, where do we think commercial real estate's gonna go with, offices and everything else. Eventually, people are gonna get tired of working from home. And you're also gonna see that while working from home has worked, it's a very different environment from working from home. And you're gonna see, everything's working great. 2 years from now, management, how they're gonna structure it, how do they know how to promote within. They're gonna, eventually people are gonna want to get back to that. So while there's gonna be a very big dip, I'm not even gonna say low, we might just say a very big dip that we see in commercial real estate, we're hoping in the next 18 to 24 months that we're gonna start seeing it go back up.
that's probably like the second part of my question, is if under OCIO, if Marquette felt that we were a little overweighted in real estate, you would be reducing that somewhat, or
Well,
possibly?
I think that was the next step, what I wanted to
Okay.
talk about a little bit, about, we are just at the beginning of restructuring you, so there's a couple other things that I would like to do. So I will address that. Let's just quickly look at the portfolio update, this page right here, the loose. And you can see quarter to date, you're exactly where we want you to be, 3.6 versus 3.7, and that actually doesn't have the prime in there. But, we always said we want to track closely in an up market. And, MFS, low volatility, 4.9 versus 3.9. Schroeder's, which we just got you into, 3.2 versus 2.2. Look at Lord Abbott high yield, 5.1, and year-to-date's not you, year-to-date, just on the fixed income because you weren't in it year-to-date, but we're required to show you what that is.
Right.
And you can see that that's negative, whereas you're positive, 5.1 versus 4.7. Eventually, pretty soon we're gonna get you out of that, but it was a great, great play for that. And that is one of the benefits of OCIO, we just get you out, we can put you in and we can get you out there. So I think you're in very good shape. That's at end of July's 80.4, and we know that you're up from there, so you're at 81, which is really nice to see that we're back to where we were, plus as of the end of 2019. So you've had some nice growth. let's turn back to Exhibit 2, Tab 2, Page 1, looking ahead. One thing I would like to do is talk a little bit when we look, that's Exhibit 3, sorry, I apologize, Tab. I'd like to come back and do an infrastructure education with you. We can either, we could do it on an educational meeting, everybody tell me what your schedule is, I can call in, however you'd like to do. I'd like you to start thinking about putting 5% in infrastructure. And the reason is that we know infrastructure is gonna go on, we want more diversification, we're putting it in all of the county portfolios, and there's an 18-month wait list queue. So that's another thing, is to start saying, let's look at this, let's talk about it, but then also let's get you in the queue. At any time you can back out, but that's a really nice way of getting some more diversification in the portfolio. And we always look at kind of taking a little bit from equities, we might take a little bit depending from real estate, and we would take a little bit from fixed income, and that's a very nice, about a 5% we would look in doing that. So that's one thing I'd like to do. The other thing is look at asset allocation, run you an asset allocation study when we look at infrastructure, and also look at adding defensive equity. And that would be a little bit more on an equity, and what it is, it's a 50-50 what we do combo, and they actually are options. It's a traded mutual fund. It's not like you're getting an options manager there, but it does allow them to be very, very active in the market and get a little bit more of a return when we see some negatives. So that is the one thing I'd like to discuss that with you too. And that's gonna be some education to be able to understand that and to be comfortable with that. But it's a mutual fund, so it's traded, get in and out of it any day you want. And then leading on is the custodian search, so we can go to that. Are there any questions? I'm trying to talk as fast as I can without maps. All right, over the course of the last couple of years, just give you a little bit of history. You had Merrill Lynch years ago with a great guy called Bill Lewis, who we just loved working with, and I actually worked with him in carbon at my prior firm, so kind of have known the history of your custodial issues and stuff. Merrill Lynch did a great job, and then Merrill Lynch is no longer allowed to do this type of institutional accounts. So you went out, and I think we actually found you BNY back then. You went out and did a search, and we helped.
Through Jonathan Seidel.
Yes, yes. So BNY at the time was really put in an effort to take over the custody business. They kind of moved out of New York, and they were kind of looking at, Pennsylvania, a lot of these municipalities, going to Virginia, and just all the surrounding areas, the East Coast, and they said, let's go into the custody. Well, at that time, BNY also had a great transition team, meaning that they could do a lot of trading. And so they thought, we'll do custody, and then we'll also be able to do a ton of the trading. This kind of really matched up. And they came out and said, basically, you're not going to pay for custody. It's very, very inexpensive. Right. Went through, you got BNY, like a lot of our clients had BNY. They were based in Pittsburgh. We had a really good, then they were in Charlotte. Then they moved to Jacksonville. And at that time, everything fell apart. So and then the team actually airlifted out of Jacksonville, and you keep on getting different team members. I mean, to call anybody to get any help. We do have a woman called Wanda who is actually overworked, but she's very good. And if you choose to stay with BNY, that's fine. But one of the issues we've had is trading. They have limits on when we can buy an ETF. They can't do same-day trades, so you're out of the market. We've actually held off in moving some of your Vanguard dividend, and just because it's about a $5 million investment. we wanna do some more restructuring, but we're not gonna do restructuring unless, you tell us we're just gonna have to do it, and you're gonna be out of the market for 3 or 4 days. You can't trade that in this kind of market. You really need to be able to do your buys and sells right then and there. There's been some issues with statements, there's been issues with getting help in statements online. So we decided to do a custody search for you. We've talked about it, you all agreed to do that. And so let's go to Exhibit 1. I always go to the fees, because you know what, that's where it goes down to. Basically, all custodians, the ones that we pick, can do everything that the county needs. So we look at BNY, and as he said, they were 2 basis points on market value. They had a minimum annual fee of $3,500. They waived the money market sweep maintenance fee. Security purchase, sale, or transfer, book entries, $10, so very inexpensive to trade. Audit confirms $50, account distribution per wire or checks about $12, and online internet access fee was waived. So it was very reasonable on there. US Bank, we look at their fees, and they're a little bit different. We can break that out, but they have transaction fees included, wire check distribution 7.5, so they're a little bit less than BNY, and periodic payments 1.75 plus whatever the postage is. And they do the lump sum 10 for the 1099s, the monthly death audit, the call center online system, and participant portal. If we turn the page, because I've summed this all up, I just want to point out some of the different things on there. PNC has an annual account maintenance fee of $500. To do transactions are $15 each. All other securities are $15, so BNY is $10. Benefit payments are $25 per lump, and then $1 per 1099 plus postage. So they're a little bit less expensive than that. Wilmington Trust has an ongoing wire of $25, electronic transfer check or savings $10. We look at their $10 to do DTC mutual funds, and then global and euro securities are $75. So they are a little bit more expensive in trading, and all other securities are $40. And they do not charge to do your tax reporting. So let's turn to page 8, which is your side comparison. BNY currently right now has a minimum fee of $3,500 and based on a fee of $80 million. We just took the $80 million because that was right around where the market value you were. Comes up to $16,000 currently. US Bank comes up to a minimum fee of $10, but they're at $14,500. PNC's a minimum of $25,000. Their custodial is $26,250. And Wilmington Trust has a minimum of $10,000, and their estimated fee is $24,000. So obviously, US Bank is the cheapest fee. Doesn't necessarily mean that's the best thing going forward, but they have come in cheaper. I do also want to tell you that all of these fees are because of the relationship Marquette has. We have so many that we are able to offer you a discount because we have so many custody with each of these banks.
Sarah, question, those other fees, like the per item fees and things like that, I don't think that's estimated in the total fee.
No, it's not estimated in the total, and you're probably gonna be a little bit more than that, but it's gonna average out to the same. Wilmington Trust, you kind of look at who's the most inexpensive, and that's where you're gonna be if you add up all the fees as well.
That's right.
So, I mean, you're gonna have to do those regardless of what you are. And then I just wanna go to Exhibit 3, which is client service. So we've made sure when we go out and we do this kind of RFI to custodians, to make sure that they can do everything that you need and they can do everything that we need, meaning that we can settle trades, we can get in online, we can move money if you need it. So I just want to talk a little bit about the client service because I think that's really important when you have a relationship with a custodian and you'll be dealing with them. So we go to the last tab, BNY Mellon provides each client with a single point contact client service, ensures the client doesn't need to call multiple specialists. They do have online reporting. They track status of trades, positions, securities, run detailed holding reports, or monitor real-time cash activities. Just for a point of reference, we are now doing a monthly report for you because BNY right now has had a lot of trouble being able to do that. Like, we've been finding that, the value of CITs are missing. So we're now gonna take that over for you, just do a one page that, Mark, I think you'll give to everybody
Right.
in your reports. US Bank's got a 2-point contact. They've got a relationship manager who is responsible for retaining the growth in the relationship. They will also work with us at Marquette. If we have any issues, you would call me. If you're not having any help with your account manager, we'd be on the phone with them, right, as well, too. The account manager acts as the day-to-day administrative operational contact, maintains in-depth knowledge of the account and client needs, and they monitor account activities and execute daily transactions. They also, turn the page, have an online access. Their online is fairly good. You can actually go in and look. You can do a lot of customized reports for viewing, printing, and downloading. They do offer training for that. So you can download and get the information you want. PNC Bank, I know it's expensive. They are actually, I would say I've worked with the team at PNC Bank for over 20 years. They're very, very good. Their statements are great, their online's great, their trading department's unbelievable. But I do know that if we're looking at costs, they're more expensive for you. But they do have an onboarding specialist and team, so they'll take you through the transition hand by hand. And they do have an iHub tool that you can go in and do. Everybody has online. Wilmington Trust has a senior manager. They have an institutional client advisor. They've got a relationship manager. They have a backup relationship manager, and they have administrative associates. I know Wilmington Trust seems expensive as well. We actually work with them. Clients love them. They're very hands-on, and they also have probably the best online that you're ever going to see. So I think basically that's, I just kind of wanted to highlight this for you. We can get more in depth if you want to. We can talk about this. We know that they can, handle anything that you need, but we would like to suggest that you look at your custodial relationship. It's your relationship. It's not ours. We will work with whoever you pick as long as they're able to do, the things that your account needs them to do and we need them to do. So these are the 4. One includes your incumbent BNY. And are there questions?
Well, based on your analysis and knowing the county fund, as long as you do, does Marquette have a recommendation of those other 3 custodian
I think you would be fine
candidates?
with any of them. So, I think any of them would serve your purpose for what you wanted.
Mhm.
I think you might find yourself in a better position than your current custodian. They used to be a fabulous custodian. It was a great pick when you went to them. We have really had an issue with trading. If that's not your issue, we would still work with them. So, that being said, you could also look at that you've got US Bank's going to save you some money down the road, just a little bit. It's also, I think, when you look at being out of market and not being able to do trading in one day, so you can't match your trades up at all. So you're going to sit on your sells, you're going to have to wait till you do your buys. That really can cost you a lot of money on an $80 million account.
And it also kind of defeats why we went into the OCIO in the first place, because we're still experiencing a lag.
Right.
Yes.
So let me ask Sarah, because I know you have a relationship with all of these firms, so, you know, I don't think you wanna say, this is the one, it's more or less up to us. Out of the three, that we would be looking
You
at,
guys are killing me.
what's that?
Okay, yes.
That's the hot seat.
And at
Uh,
this point.
Out of those three, is there one that would be considered a better fit for a pension our size?
I have a client that's your size, that's with PNC. Got clients that are your size that are with US Bank. We do have Wilmington, but they're larger clients on there. I think that when you look at where the economy's going, we always say you have to manage, you know, your portfolio to your liabilities and also look at cost. And I think that cost is really important right now. So I think that when you make your decision that you should think about cost. All of these are very good fit for your plan of your size, otherwise we wouldn't have brought them to you. But I can tell you that I think that you should be very mindful of cost right now, due to where we see, you know, the market's going, and you should be mindful, because, I mean, I hate to say this, but, you know, you've decided to make the OCIO transition, but that has actually helped lower some of the investment manager costs. You know, we were able to go back to CS McKee because they have a relationship because of your OCIO. So we saved you 5 basis points on that. So I would say that I would lead you to look at cost.
And Sarah, I don't think we're contractually bound with Bank of New York, right?
No, you're not.
And if we were to switch soon or in the near future, are we contractually bound with any of these new entities for a period of time or not?
No, custodian, I mean, like anything, I mean, you can get rid of all of us in 30 days. You know, I mean, really, that's your decision. We don't, now they will, you know, what's usually when you go into custody, that they'll keep their fees where they are. We've never seen, we'll go back sometimes and say, you know what, let's try and lower the fees, but we've never seen a spike in the fees. Custody's custody, so you can move around. And I do want to just say that, you know, currently right now, we have got your investment fees with everything added in. Now, it's going to change a little bit, but as of end of June, because then we switched over to the CIT, we managed to get you down to 32 bits all in. So I think that's very good considering how active you are than you were. But my thing would be that since you are looking at costs, I think any of these can do that. But if that's a big concern to you, I think that might be the best way to look at this.
Well, equally concerning, or the bigger concern, is the ability to do that trading in and out the same
Yes.
day without that lag. That's
Yeah, I mean, that's why we
critical.
did this. We think this is really, you know, it's just holding your hand, you know, tying up your hands. So, you know, we think that it was time to look at this. And BNY has really changed their team since they were, you know, started.
Isn't there something else with Mellon as well, other issues other than the lag?
Oh, it's getting your, the statements on time, being able to go online, them pricing, the securities correctly. I mean, there's been a lot of issues.
I think what you're talking about is the one payday before Thanksgiving where Bob and I had to be here till like 2 o'clock in the afternoon because we couldn't get anyone to confirm that the money was transferred.
Yeah.
Yeah.
Okay.
All right, so there we go.
You know, yeah.
So you know, I would love to see you make a decision, and that way we can move ahead with all the transition, get contracts and everything to you and do that, so.
Personally, I'm leaning towards US Bank, not only because of costs here, because of other issues.
They've got a really good team. I mean, everybody's exceptional. US Bank, the team that we've worked with, we've really worked with very, very well.
I think if the board's ready to move today, I make a motion to go with US Bank.
I'll second that.
All right, Mr. Sheehan,
Yes?
Mr. Spurcheck, yes, Mr. Arner,
Yes.
Mr. Lukasevich?
Yes.
Mr. Notstein?
Yes,
Unanimous.
All right, great, then what we'll do is we'll get all of that moving and talk about the transition, and Terrence will probably be working with you on the custodial, so, we will do that. And, just so you know, this is one of, the benefits of OCIO. We went out, we did it, we did the RFP for you, we got all the information, this could have taken months to do. So it's really trying to be as proactive, for you. I hope that you've started to see some of the benefits of that. We think you are in your performance. And just so you know, we are looking at these portfolios every week. We're gonna start doing, once we've done the transition of your custodian, then you're gonna see us to do some more trading. We're gonna restructure your equity portfolio a little bit more. And then we probably want to set up a time to come and do some more education. And, that's always so hard, but I think it's really important.
Yeah, it's,
Really,
extremely busy schedule
I-
right now, so I don't know when we'd be able to, how much time do you think you need, hour?
I can do
and
an
a half?
hour. So whenever, is good for you, just let me know. You can get that all together because I'm happy to come in and do that. I know that, of course you decided to switch and then it's, we've had the virus and you're all so busy. But I also want to make sure that, this is, we're really getting the asset allocation where you want to be and that we're, working, doing education. But I also understand the time constraints. So I can come in and do it if that's easier. I can do it in an education meeting. You can throw some dates at me. I can do it at the next,
Well, do we have, Hay Group coming in?
I did
I
not.
don't know when they're scheduled, not till, when, October
Because they
or
would,
later?
they would normally be here in August or September
Right.
to do that, to do their report to us.
So what are you saying, you would rather have their report first?
Well, I think you need that report
Before
reviewed
we-
and wrapped up because it affects going into next year with your mandatory contribution, so.
Yeah, I think that's actually, we'll reach out to them. We basically know where you are on that. I can reach out to Korn Ferry. If they are coming out and you schedule them, I can always come out the day before, do the education, then come to the meeting and, be there with the report too, because they can send me the report. I can go through it and really know where you are on there. So that's always an option.
I'd like to reach out to David Riker and see what they were planning as far as their visit.
See if they're gonna
So
come in
they
in
usually
September?
come in before you guys get into the budget process. They're also gonna be forwarding a budgetary number
Yeah.
for you to plug in for the required contribution.
So,
And if you wanna make any changes to the plan, that's when you kinda run those or bounce those off of Dave so that he knows in
So,
advance
we
going
get
into
Korn
next
Ferry in here in September meeting,
September.
then should we have the,
No, I'm gonna be out in September. Yeah, I'm gonna be out of town.
I don't know, waiting till October, really pushing it budget-wise.
I think you should have Korn Ferry, then if it's September, send them out, send your actuarial report and get them to do an executive summary. CC us on it and I can help walk you through it. Would that help? And maybe get them to do a call on.
Yeah, because with you not being here, Mark, I don't know if that's a major issue because we already have the report. He's just
Right.
gonna review it, so you
Right.
already have that report, so missing that meeting might not be a big deal as long as A Group and you,
Right.
Sarah, coordinate preparing us for the next quarter.
Okay.
Giving us,
Let's still plan on having it come in September.
Okay,
yeah.
all right.
And then I would ask them to do an executive summary and the report and then send it, and if they could
Okay.
CC us on it too. And then,
Maybe I could possibly call in, I'll be out of state, but.
yeah, and Dave could also probably go through it too with you on that, and then we'll get that, and then since you're not gonna be here in September, maybe I can call in and do an education or come in next week. I can always, I mean, you know, whenever it's good.
I'm looking at it from the point of view, if there's actions to be taken by the board, I'd rather have Mark participate in that. If it's just a review of a report,
Right.
that would be one that Mark could more or less sit back on.
Right. I would send Kevin in my absence to at least have some representation from the office, but I could still try to call in, depending.
And you can certainly call in, Paul.
Yeah.
and,
I'm in a
You know,
different time
we can
zone.
take 2 or 3 calls on there, so.
And then October, when I come out and do the quarterly meeting, I can do an educational, we'll just do it this way. Why don't we do that? And then we'll also know where it is on the budget, on the assumptions and stuff. I mean, do you remember you're coming off of 2019, so it's not gonna be horrific. You know, we still think that everything, I mean, it is for you budgetarily, but you know, what your contribution is not gonna be bad because you've had the 2019 returns.
A better idea what the economy is looking like too at that time too.
Right, so I can do an update on that.
So one last question, Sarah. Because we're not gonna be meeting or talking about these new asset classes, as you're pulling us back out of the real estate, I believe?
We may or may not. We're just
Okay.
we're gonna talk about that.
Okay. Do you have any idea where you would be deploying that money
I'd
in the
like to put-
meantime?
But well, it's gonna take 18 months to get it out. Do you know what I mean? We would structure infrastructure, what I'd like to do is, when you get called on infrastructure, if you decide to go with infrastructure, then I would start working to get you out of the part of it. I would fund some of it from real estate. So you're already gonna be through a whole cycle. I mean, it's such a long term. Defensive equity, I'll just take a little bit out of fixed and a little bit out of equity if you choose to do that. So infrastructure is really, educate, you could say, let's go ahead with this, and then it's gonna take you 18 to 24 months to get into it. So when we get closer to the date, I've just done this with another county, I just took a little, I've been keeping some of the cash reserves. They got a call for October, and I've taken the call to generate some of the money out of the real estate.
Okay.
And if real estate's really booming, and we, you know, the economy for some reason turns itself around, hopefully, you know, might sit there and say, let's just take more out of fixed income, depending on where.
So it's a matter of us jumping in and getting at least into the queue to
It's
get
getting
into that
into the queue.
investment. So it's not something where we should have made the decision yesterday.
No, it's,
Okay,
it's.
So we have time on that.
You do have time. The nice thing is you're not gonna have to interview, we'll just bring you who, and we are probably gonna put you to JP Morgan. If you died in infrastructure, which is nice, because I'm gonna take some of the money from real estate, just shove it into the JP Morgan. We like them, they're a great county fit for somebody your size. So, I would just come and say, here's who we put you into as discretionary, and then explain to you what it is.
Sorry, just one final question on the custody transition. What typical time frame are you looking at to have that?
What we'll do is we'll
That
send
it happens?
out new contracts in the next couple of days to sign. And then we'll get the transition team probably to get on board. And then they'll open all the accounts, and then they'll just come in, grab them, and put them in. It doesn't really take that long on that, because you have all listed securities. So it really isn't, you know, and you're also only taking out a monthly contribution. You're not doing all your checks out of that account. So it's actually, it's just gonna be wiring. So it should take about 72 hours. Once we've opened it, got you online, got a transition team to work with you, because you'll
Okay.
be doing a lot of the online work. And so that's how long it should probably take.
And you typically try to stay away end of the month because of the,
We usually try and do it in
monetary
the middle
needs
of the
and
month.
transfer and so
We our more concern is that we're not gonna need to trade.
right,
And so we'll look at your portfolio, do an asset allocation, we'll know where the market is, and know that, well, probably in the next 10 days, there's not gonna be totally disastrous, we'll just move it over,
right, okay,
on there.
thank you.
And so it's fairly easy, I mean, it's a lot of work, but
Right.
it's not doesn't take months to do.
Okay. Anything else for Sarah?
Well, I'd like to thank everybody, again, first time since I've seen you physically. I hope everybody's having a good summer, and thank you again.
Any further business?
No.
Meeting adjourned.
Thank you.